Hi there, a very good morning and good afternoon to all of you, depending if you're watching me. This simply starts with another video, and this video relates to the market. So, we have been saying market mayhem for the last 4 weeks or so. So, let me give my take on the markets and where it could be headed over the next months and how is the now. So, let's get started. First of all, a disclaimer that this is not a stock recommendation. People in position of any share that I talk about due diligence and research, and I'm not in favor or against any company about. I'm not a member of the NSC and BSC and the advisor, whatever respect to investments trading you take. Kindly do consult your financial advisor for that because the market is tumultuous, market is extremely so okay, there is a chance of. Before I talk about the markets here, small request is kindly support me on Patreon and well, help me grow the channel if you have questions seek out detail. Once you get the $10 per month membership, you have access to my portfolio, which is actually also watch list, answer to all your queries, discussions on global and domestic economic, discussion the Nifty, uh, mid cap, small cap indexes. So discuss indices as well, and whatever queries with respect to having, I'll get a member on the Patreon website, or if you're not able to, then you can become a yearly member. In order to discuss about the markets, let me take you to the TradingView website. And so here we have the Nifty index live, which is trading at the moment, and we are seeing that we have broken the previous support of 24,380.78, the low that was made just recently, and we are going further down. And this was the reason I'm making this video. If you look at the RSI factor, we are down to around 30 levels. I think we are extremely oversold on a shorter term basis. On a longer term basis, yes, I can say that there could be more pain. But if you see here, there is support around the 23,924 levels, and there is support at 23,400 levels. So somewhere around 23,400 to 23,900, the market should bottom out, which is 1,000 points lower from here. I don't see the market going below 23,000, and I'll give you the reason for that. 23,500 ish is where I'm feeling that this market could still find. Later on, we'll see 3 months, 6 months down the line as to how the numbers of come in, then we'll decide. So I don't know how the analyst had penciled in 1150, 1160 rupees earning for this year. I was penciling in around 1110 rupees, and this is exactly what we are going to. If you look at the earnings picture, we are going to come with around 1110 rupees of earnings. If we see 24, if we say 24,300 as the level of today, then we are looking at a scenario where the market is currently trading at 21.9 times, which is not expensive. And I'm saying immediate earnings, I'm saying FY25 earnings. If I extrapolate this to FY26, then we are looking at a situation where we should see a growth of around 12%, 1243, based on that 24,300 at around 1245 rupees, around 19 and a half times. So we are coming to that range of 18 and a half to 19 times where the markets normally bottom out. If you see slightly longer chart, this is weekly 5-year chart, and if you see closely, around October of last year, so 1 year ago, around October, around here, market bottomed out around 18,800. So, and this was the time when the market was trading at around 18 and a half, 18.6 times 1 year forward, and that's how the market bottomed out. So that is why I have a firm belief that we could be very close to a bottom for the next 3 months. Nobody is calling a bottom at the moment, and we are seeing carnage in the mid and small cap indices, and that is exactly what we are seeing. We are seeing stocks down 40, 50, 60% already. There is extreme carnage already. I believe 23,500 on the Nifty, where one should find a bottom. Second thing is, if you want to put in your investment for trading or investment purposes, say for the next 1 year, this is the best time, because over the next 1 year, what is there to lose? To lose is about 1,000 points on the Nifty, about 4 or 5% from here, and to gain is something like, if you say that 1245 rupees earnings would come in, normally market peaks out at around 23 and a half, 20 times. So if I say 23, you're looking at 29,500. So an upside of 5,000 points, a downside of 1,000 points on Nifty. Whenever the market change its, you can say, the you can say your mindset changes and all the bearishness in the market go away, and then people talk of higher levels. This is during the time of extreme bearishness that we talk about 20 to 21,000 market going down, and that is where you have to show gumption and press that buy button, buy onto stocks. If you have a 1 to 1.5 year time frame, if you have a 3 month time frame, then yes, you have to respect the screen and wait it out for the 50 DMA to be taken out. If you look at the 5 year chart of the Nifty, well, we are seeing, this is the weekly chart, we are seeing 4 weeks of extreme downturn, and now we have broken the 20-week moving average, which was extremely crucial. Now, if you have funds today, this is the best time to start buying. Maximum downside I see is the 50-week moving average, which is again 23,100, 200 would come out to, which is exactly where the 200-day moving average is there. So a lot of support is there. If you talk about technicals, in terms of fundamentals, I have told you that if the market goes to 23,500 or say 23,300, 200-day moving average, based on even current earnings, we are trading at 21 times, which is extremely not cheap, but which is not extreme. Extreme is something like 24, 25 times or even greater. We're trading at 21 times current earnings. And if I extrapolate that further, then we are looking at trading at around 18.7 times. So I think 23,500 is where this market would be headed, and that's where buying should come in. Now, FII selling could continue, but the way DIS, second reason for me to be positive on this market from a 1 year perspective is the fact that FIIs have sold 1 lakh crore over the last 1 month, but DIIs have bought big. So more than $10 billion have been sold by FIIs, and this was the same figure, round about the same figure in 2008 when the market fell 60%. This time around, the market has fallen 6%. So this is why I believe that in this carnage, in this mayhem, it's better to buy good quality, top-notch companies which you believe are going to perform over a period of time. To give you a hint, I'm not going to talk about stocks, but to just to give you a hint, one should look at companies which have been growing over the last 2 3 quarters on a year-on-year basis, around 30 40% on the profit basis at least, and 20% on the sales front. And we see visibility that the same will continue, even if it is from the consumption domain, even if it is from the finance domain, any other sector, it doesn't matter. You need to find out companies which are growing at around 40%, 50%, 30 to 50% on the profit front, 20 to 30% or greater on the sales front, and you'll be fine over a 1 to 1.5 year period. This is not a market to trade into. This is a market where one should look to buy and hold over a 15-month period, and this is exactly what I'm doing. What I'm buying, what I'm doing with my companies, etc. You can join me on Patreon, and you can have a deep understanding as to how I'm going out this treacherous time on in the market, how navigating it. So this was a short video on the markets. Please do like and subscribe my channel, hit the bell icon so you can get my video away when I post it, and kindly subscribe to my Patreon network. Thanks a lot for watching.